welcome to the closing beat and happy Monday to ya. How you doing out there? Hope everybody had a good weekend. Remember, next Monday, the stock market's actually open for a half day, and then Tuesday it'll be closed for the 4th of July, so we can go set off all the fireworks. And friendly warning, if you're in my neighborhood, look out. I will officially be blowing everything up. I mean that like in a fireworks way. You know, I'm not terrorist way. I'm just saying, you gotta be clear these days. I have an assortment, like Disney fireworks have nothing on what I'm about to do for this 4th of July. So enjoy your 4th of July, and I'll remind you guys towards the end of the week there. As far as the stock market goes, surprisingly quiet today, if you ask my opinion. We got the S&P basically, I mean, it started a touch higher, especially overnight. It was kind of interesting to see it higher given all the stuff that happened over the weekend in Russia, a little chaos over there. Last week we're down 1%, but still has a 15% year-to-date gain there. We've erased almost all of last week's gains so far. Every index was down 1% or greater going into last week. I'll point out that healthcare was the only sector that was positive on the week. That pretty much gets erased today, almost gets erased today. There's just no sign of leadership out there. So if you look around the stock market, break every sector in, or break the index into every sector, we've got tech even pulling back a little bit. Consumer discretionary trying to do its thing. As I mentioned, healthcare with a minor little rally there. But look around, what else do you see sector-wise that's leading? Industrials a little bit, although it took the week off. Everything else trending lower. So we have narrow participation. There's also no correlation in the markets right now. If we look at the average sector's correlation to the market, we've hit essentially a year-long low, meaning the market can go higher, but these sectors are not participating to the same level. The average stock participation is less than 0.25% to what the market is doing. So unless you have the top 7 stocks that are actually leading the way, you got nothing. Right? Stocks are just not correlated to the broad market, and that's because the broad market is being led by just a handful of things. Interestingly, today, if you care, most stocks in the S&P actually traded higher versus lower. There were 124 stocks that traded lower or higher on the day, and out of 505, right, I should say. So 24% of the market was lower, yet the stock market itself was quite a bit lower there by the end of the day there. Why is that? It's because for every gain that you had in the stock market today, you had losses by the top 7 that more than erased it. Easily, those big top names that we're looking at, those 7 mega super duper cap stocks, erase their participation today, takes off 4.5 points, 4 points, 3.5, 2.5, 2 points, and so on. So anything that even tried to rally today, their rallies were just masked by the weakness in the broad markets there. And that is something that you could continually see going into this week. So if we look at the S&P here, we're working our way back. It's fine. Had a nice little rally. It was an extended rally. And again, it was led by those big names out there. Look at Microsoft finally pulling back today. Apple's one of those that I mentioned is in one of those, more of a power trend, if you think about it that way. All very strong there, but in the short term, seeing a little bit of weakness is going to do the trick. Tesla got downgraded today, I think by a couple people. And so Tesla, even every person that downgraded Tesla today was saying, you know, it's great. We're not complaining about the stock. It went too far too fast. That's it. Goldman Sachs came out with a report just saying it did better than we expected, but that means it's overpriced at the moment, also overvalued. So that put a little bit of a halt to the rally there. If you look over at the NASDAQ, of course, that's led by those big names there. When those big names have a bad day, so is the NASDAQ. It goes back to what I was saying about a week and a half ago. What happens when those big 7 names decide to take a break or worse, pull back? What brought you to the dance is what's going to actually pull the markets lower, right? So that's fun Texas way of saying that. I can say that. I'm from Texas. The Dow hopefully not making its way back into this chop consolidation range. Notice the difference. So the Dow inside of this range really got nothing done on this last rally, whereas the S&P, the NASDAQ, managed to break out of the chop and consolidation that we saw earlier in the year. So any pullback in here would be perceived to be buyable, whereas in the Dow, you go, what am I doing? Am I buying like middle of the range? Do I wait? Do I look for maybe a new uptrend here? So a little bit of confusion there in the Dow if you're one of those index type traders. Over to oil. So oil actually priced in a little bit of the Russia nonsense this week, over the weekend, the volatility there. Just, again, not as much as you would have thought. It actually finished higher on the day. Oil executives kind of saw this coming. If you want to look over at an interesting way of analyzing their earnings reports, if you look through the earnings reports and you search for words like energy security and ESG, which has been popular lately, you can see that more oil executives are interested in energy security than they are actually focused on all the ESG stuff that's out there. So that has really changed course here just a little bit, just recently, and now we can see by scanning through all of their earnings reports since earnings season is over. I'd also like to point out that FANG shows the most relative strength there. I'm just going to refresh that for a second, see if it pops up. And where did I put that there? We're going to have to take my word for that one, actually. So Diamondback Energy shows the most relative strength relative to its peers, meaning this doesn't mean that it's strong. It means that it's pulled back the least out of all of them. When people look to invest in a sector or a grouping of stocks, they will always lean towards the one that is relatively the weakest compared to the sector. That would be Diamondback Energy. I'm not saying it's going to pop from here. I'm just saying that one would have more of the attention. You'll likely see more of the volume there because that's the easy thing to do when you're looking at stocks or individual sectors. Think about it like Home Depot and Lowe's, right? If they were both pulling back and you're like, well, I do want to invest in one of them, you presumably would want to invest in the one that is showing the least amount of weakness. There should be something there. There's a reason why people haven't sold that one as much, if it were that one in this case. Well, that's the case for Diamondback Energy. That's the one that's pulled back the least. Compare it to Marathon, compare it to Oxy and other competitors out there, and you will see what I'm talking about there. Okay, other than that, you can look around bonds with a little bit of a gain there. It's not much to look at, really. It's kind of a tough one there in both the interest rate markets right now. Oddly enough, utilities doing well, being an interest rate sensitive kind of area. They're doing well. I think they're holding up compared to others. Any interest rate sensitive stocks tend to be doing well relative to interest rates. However, what are you going to do? There's nothing there. It's a tough place to be. By the way, looking around the markets last week, although every index did manage to find its way a little bit lower, bonds were the only ones that crept higher. Very slow and steady type rally over there, but I would probably emphasize the words slow and less steady. All right. As far as stocks in the news, Amazon is talking about using small businesses to deliver its packages. I don't know how that goes just yet because there's not a lot of money there, but the concept is really kind of interesting if you're curious. They're basically going to say, hey, will you let us drop our packages off at your business? And when you get a moment, their wording, not mine, when you get a moment, you'll go deliver them for us. And by doing that, we'll kick you back some dollars there. So would you do that? Now, you don't have to be a delivery company. You could be Jazz Wealth for all it matters, right? They could just drop packages off here throughout the day. I go, Cody, hey, you want to go take that package over there? Yeah, sure, I'll go take it. And they'll pay us money to do that. They predict it's about $27,000 a year extra for companies to do that. And that has actually started here in Florida and a bunch of other states as well. But that's why they were in the news here today. Pfizer's got a drug that I can't pronounce. It's the competitor to Ozempic. That diabetes drug where we found out, oh, wow, look, we're losing weight too. And so people are taking that to lose weight instead. Actually, very hard to get these days. Well, their version of that, they're going to stop it. They're not going to participate. Doesn't mean they're out of the game. Maybe an overreaction here because it means they're going to focus on their pill version of it. So they have a pill version that's in phase 2 right now. Again, I can't pronounce that one either. But that's what they're going to focus on. So they're not out of the game. They're just saying, we're not going to mess around with that existing drug for reasons we may never know. All right, and Boston Beer Company hire today. This was in Barron's over the weekend. They were talking about making the comparison of like, hey, Modelo's gaining traction over there, doing their thing, whereas Sam Adams is focused on, Boston Beer is focused on what is it called? The Twisted Tea. They have a brand of Twisted Teas out there, and apparently you guys are drinking your Twisted Teas. So I don't know, summertime maybe, something going on like that. Hey, our Jazz After Dark series that we do, if we can get it up in time, the Jazz After Dark tonight will be all those headlines that you missed while we were watching the submarine meet its end. I don't know how to say that nicely. A lot of interesting things happening out there, and I just kept kind of compiling them. I'm like, that's news. That's kind of interesting there. And one last thing I will mention is the mortgage issue there. Remember, President Biden and his team had put in a plan that took place last month. It actually started last month, where essentially the better your credit score, you have to foot a little bit of the bill for people that don't have a good credit score. Well, the House passed a bill to block that today, so we'll see how progress makes there. That was one that on social media was pretty big, so I don't know where you stand on that, or doesn't really matter at this point, but we'll see what happens there. Will you have to foot the bill for some people that maybe don't have stellar credit? It looks like that's going to get blocked. All right, I'll wrap it up there. Remember, Wine and Wealth for clients. If you are a client of Jazz Wealth, you're welcome to check that out. Last week, we talked about your IRA deductions, how to determine if you're going to get them. Found a really cool way of just sort of visually showing you a flow chart of how you can expect that instead of having to read through the IRS guidelines there. And also, we've been talking about the digital dollar taking place here this next month. So if you want to know the ins and outs of that, you're welcome to check that out as well. If you're not a client of Jazz Wealth, I hope you'll check us out, jazzwealth.com. Did I say the name enough times for you? All right, enjoy the rest of your day or evening, and we'll see you a little bit later. Adios.